Welcome to this Tuesday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up we have Donny Gilbert talking to the brokers. We also have Mike Baudendistel giving us a shipper update, but first we're going to go to Zach Strickland with a carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your carrier update presented by PowerFleet. I'm Zach Strickland, and today the market continues to show signs of softness throughout the country, but particularly in two of the largest markets in the country, Atlanta and Ontario, represented here in the weighted rejection index map by the red, the darker reds, of course, indicating that the market over the last week has started to soften significantly. 7-day weighted rejection index, for instance, so it multiplies the outbound tender market share times the weekly change in tender rejections. Anything going red means it's decreasing or declining down here pretty deeply, and then anything in the blue means that it's relatively increasing versus the rest of the market. So Eau Claire, Wisconsin, which we talked about yesterday, still one of those markets that's showing increasing signs of tightening capacity, at least relative to the rest of the country. Doesn't mean you're going to see necessarily a huge 15% jump in spot market activity or anything like that. It just means relative to the rest of the country, this is going to be one of your tighter areas. Then you have Atlanta and Ontario, as I mentioned, for instance. Now these are the two biggest markets in the United States, and what they do impacts the rest of the country in terms of overall capacity. So I have the outbound tender volume index here for both the markets, and you can see year over year they're coming down. Now, Atlanta, of course, isn't coming down as much as the Ontario market. Ontario, of course, heavily influenced by all that activity on the ports, the freight pull forward, for instance, everything going over to the East Coast. The Newark market, for instance, is starting to grow quite a bit. It's grown significantly, about 20 to 30% year over year, but the Ontario market we see has actually declined about that much. So since November, Ontario really not a lot of demand coming out of that market. So Atlanta, this is the hub of the southeastern freight market. So what that means is essentially all of the freight moves from Atlanta and it goes into markets like Birmingham, Greenville, Nashville, and it kind of spreads out because they have a lot of inbound freight that comes off the rail and various over-the-road trucking hits these DCs and the warehouses around the Atlanta market, and then it goes out into the southeast. So what that also means is that a lot of that freight is mid-haul or short-haul movements out of the Atlanta market. Not a ton of long-haul freight comes out of the Atlanta market. Now there is a good bit of tweener freight that moves out. Again, on the East Coast, a little bit more dense in terms of population overall, but the fact that this market is declining year over year is not a great sign for the southeastern carriers out there. So we really need to stay opportunistic when we're looking at, the weighted rejection indexes and stuff like that, because if you looked at my last map, you would have noticed that Atlanta's declining, but Columbia, Montgomery, to instance, to the east and west are not declining. They were one of the darker blue markets, so you could find some potential increasing opportunities of outbound freight in those two markets. Now, looking at the outbound tender rejection index for the Ontario and Atlanta market, just on comparison, super soft, 3.28% and 2.87%. Not a lot of rejecting going on in the Atlanta market due to the oversupply conditions. Ontario really soft throughout the year, even though we had a huge amount of volume coming into the ports. A lot of freight moving in the mid-haul range, short-haul range, as they were pulling that freight off of the port into regional warehouses and DCs. So carriers had no trouble keeping the capacity situation under wraps, especially as volumes were increasing. Now, as you know, that volumes were coming down in November, but tender rejections shot up, of course, due to peak season. A lot of carriers were not as available to haul that short haul freight as they were in the early part of the year, and they moved off into the East Coast. Now, everything is starting to quiet down for both of these markets as we start to close out, or we start the month of February, I should say. Not a lot of change expected there, and actually more of that is starting to soften. It's going to soften as we hit the end of the month, the later few weeks of the month. Looking at the Atlanta market, for instance, you can see a lot of this freight, all the volumes going down right now. Mid-haul, tweener haul the biggest, mid-haul the second biggest in terms of volume overall in this market. Not expecting a lot of change here, especially as we enter the March season. However, reefer volumes are starting to increase, so any reefer carriers out there may need to pay attention to this market as we hit the spring months. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Thank you, Zach. Operating in that brokerage update for the day. I want to kind of start off looking at some weather patterns that have been going on that's going to affect some issues in the Pacific Northwest and the West. So here we're looking at right through here, this is the Salt Lake City market moving over into the Denver market. We've had some storms move across this area. Salt Lake City yesterday was not hit too bad, just very traces of snow, but today it's going to be affecting the Denver market, and they're expecting maybe 4 to 8 inches of snow in the Denver market and upwards of a foot of snow in areas like the Vail Pass. Now, future, looking forward here, we expect another storm to be moving in across the Pacific Northwest this afternoon, and it will move across, of course, come down through Oregon, Washington, Oregon, Idaho, and there is snow expected in the Salt Lake City market here in a few days. It's been forecasted. So what does this have to do with our brokerage? Well, the best time for a broker to jump into a market is right after a storm. There's a lot of volatility in these areas, and we're seeing that a lot with the reefer markets in these areas. So it'd be good right now. Here is our reefer tender rejection map here on my right, your left, and we watch these areas through Oregon, through Washington, down into Salt Lake City. These are markets you need to keep an eye on in the next few days because the volatility is really going to start picking up as these storms move across. Of course, getting over into the Denver market, you need to watch that market as well as these storms move across. On my left-hand side here, your right-hand side, also is our tender rejection map for dry van. Keep an eye on this map as well. These areas can also be affected as these storms come across. Now, our dry van tender rejection rates on average are very low right now due to a lot of high capacity in these markets. So there'll be less of a volatility effect on the dry van, not quite as much as there are with the reefer because you have both your refrigerated, normal refrigerated freight, plus there'll be some protect from freeze freight added to these as these storms come in across. Taking a look at our tender rejection rates from these markets here, we're looking at Salt Lake City currently right now at 26.90%. So it's already fairly elevated in this market. Twin Falls is at 31%. And Spokane, Washington is at 20%. Now, if you look at these charts right here, you can see all three of these markets are already starting to rise. So we have upward pressure on these markets already, and we have these storms coming in, so this can push spot rates even higher than expected. Looking at here our tender lead times. Our tender lead times are a good way to measure our shippers' response to the current activity. And with these storms coming in, trucks will be delayed, shippers will be delayed. It's going to put everything behind in all of these markets. So here we're looking at 5.95 for the Twin Falls market, already almost 6 days. Spokane, Washington, 4.31 days, and Salt Lake City at 4.24 days. And you see as well, these tender lead times are expanding, which means that our shippers are anticipating an issue with capacity coming up. So they're pushing their freight out a little bit further so that they can ensure that they're getting capacity. One last market I want to look at is kind of my market of the day. Houston, Texas. Houston has struggled all year long, but the reason I brought Houston up is we have dry van tender rejection rates at 2.95%. That's very low. That puts our spot market rates, well below the contracted rates in that market. So you can kind of accept your contracted freight and then flip it over to the spot market. But what's really impressive is this red line right here. These are our reefer tender rejection rates. They have jumped up to almost 20%, 19.59%. That is the highest that we've seen in pretty much an entire year period. This time last year, it was right around the same number. So here, if you're looking at the Houston market, jump in the spot market and see if you can find some reefer freight out of the Houston market and really bump up your bids because right now only 80% of the loads are being accepted at a contracted rate.
Shipper update I'm Anthony Smith, and I'm here with Mike Baudendistel. Mike, what do you have for us today?
Hey, Anthony. So what we have today is, first I'm going to talk a little bit about shipping. I mean, there's been just a ton of articles on FreightWaves.com about impact from the coronavirus on shipping. I think this is one index that we're going to want to pay particular attention to. This is the Freightos Baltic Daily Index. This is the one index in the world that's updated every single day for container shipping prices in 40-foot containers, which is where really most of the international freight moves, with the exception of things like Ro-Ro and those things. But you've really seen a surge here. You see this on the right side of the screen, how that shot up. Now it's shot up before the coronavirus was front page news, but it does still show it at an elevated level relative to other times in the year. You see here in early 2019, it was a lot lower than it was here in early 2020. And you also see in blue, this is the China to Europe index, which has been some of the key lane where Maersk, the largest ocean shipping company in the world, has canceled a couple of vessel routings. There may be more coming, but in green, this is the overall global index. And you see the Asia to or China to Europe has outperformed the rest. So it's really gotten particularly expensive in that lane, and you do sort of look at some of the things that are produced in that region of China that's been most impacted. It's a lot of motor vehicles. A lot of those vehicles are the European brands, and so wonder if there's just really tightness in sort of that lane.
Gotcha.
This next one is talking about outbound rail volumes. These are container volumes in the U.S. and we're starting to think about, okay, how is this going to impact the U.S. market? Really, you tend to think of the Chinese New Year really having an impact sort of 3 to 6 weeks after the Chinese New Year. It's been about a week and a half. And so this was an interesting one, I think, because you look at the right, and green is the year-over-year change in outbound container volume, and it was actually positive for the first time in a long time. It was down almost all of last year. Intermodal volume was down about 5% for the full year. January was a difficult comp, so we're finally getting into positive data points. The AAR is going to have their data that comes out tomorrow based on what some of the companies have put on their IR sites for week 5. It looks like that's going to be positive for the first time in a long time. It is against a little bit of an easy comp here in sort of late January, early February. So a year ago, this sort of dipped, and so that's why we're positive versus this currently. So it gets a little bit more of a difficult comp, but still the comps get easier as the year progresses. Most of the companies are expecting positive year-over-year volumes in intermodal. This next one just sort of breaks that down into loaded, domestic containers versus international containers. One of the trends last year has been the domestic containers have outperformed the international containers, and you're starting to see that again here with the blue domestic containers, surging, but at the expense of the international containers. So that means there's more transloading at the ports, which means there's plenty of container availability.
Gotcha.
And this final slide I have is intermodal rates between LA and Chicago, and those are still pretty well behaved, pretty depressed, and so that's a good thing for shippers. You see them down at $1.16 per mile. There was a big surge in 2018, and those sort of fell off at the beginning of 2019, and they've stayed relatively low on a year-over-year basis. Those are still down 5%. So if you're a shipper, you look at what the spot rates are doing, you should expect to pay a little bit less than you did a year ago.
And any thoughts of what's keeping rates so low right now?
I think there's a lot of competition from the highway is the main thing. I think there's plenty of capacity on the rail, and then there's also the competition from the highway. So those rates really haven't moved much lately.
Got you. So a lot of competition here. Likely to see this maintain these lower rates for now?
I think in the immediate near term, yes. I mean, as the year goes on, a lot of carriers are expecting that capacity crunch to come later in the year, and that should help strengthen the intermodal rates as well.
Perfect, Mike. Thanks so much. And thank you for tuning in. That's going to do for the shipper update, and that's also going to do for this Tuesday edition of FreightWaves Now. The fun doesn't stop here. We're always posting around the clock on all your favorite social media platforms, so check us out there. We're also on our FreightWaves TV app, so check us out on all your favorite streaming platforms, including Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.